I think we're recording now. So, uh, thank you, Dennis. Happy trails to you too. So nice to have everyone with us. I think most people are logged in now. This is our weekly Thursday night webinar, and some of you have talked to me in the last few days and gotten my take. So if this is a repeat, I'm sorry. But there's some interesting things to discuss. And there's also some good things. I kind of want to hear about what you guys are up to as well. I want to hear, what is everybody doing? What are you guys doing to make money right now? What are your favorite trades? What are the trades that are costing you the most money? What's going on? What do you guys think is happening? And how has it been going for everybody? And as far as the stock side of things goes. So think about that. I want to hear your comments. Type it all in. Let's hear it. But here's just a little follow up. As you guys remember, keeping a low profile. I like it, Steve. I like it. Made $400 on Apple calls this week. Way to go, Roy. Good job, my man. That is awesome. Apple had a pretty good run. Let me look at what am I looking for? Oh, I think I'm looking for what do we have over here. I don't know what is going to pop up on this, but oh yeah, okay. I'm always cautious. Not like I would have any pictures on here that would be crazy, but sometimes you just never know what's what's going to pop up. So it's always crazy. Here we go. Here is what we discussed on Thursday of last week, right? We talked about these patterns, and I want to know how many of you guys kind of watched these patterns and saw some of these things play out, and how many of these things are still playing out. How many are in the works and still kind of making this type of run? As Roy brings up Apple, was there a noticeable bullish pattern, a continuation pattern? Apple's been kind of coming up. Was there anything noticeably bullish on there that we could trade? Apple had earnings this week, I think. Everybody felt pretty confident about the fact that Apple was going to kill it on earnings, with iPads and the different kinds of software services they had. They thought, oh, iPads are going to go crazy because every kid in the country has to go do school from home. By the way, my daughter, who is in first grade, the elementary school sent all the kids home with iPads, and they had one heck of an online curriculum set up. I talked to one of the teachers and I said, what program are you guys using? This is great stuff. And they said it was something I'd never heard of. But my daughter, who's 7 years old, opens up her iPad and she clicks on the school app, and it opens up and there's tabs for Monday, Tuesday, Wednesday, Thursday, Friday, and she just goes through the lessons, and and there she has it. So at least in this school, everybody got sent home with iPads. I know some schools didn't. Every school kind of had their own thing, but everyone was pretty confident that the sales would be up quite a bit. And apparently they were. Apple, nobody's worried about the fact that Apple's still, I think, 90-ish% closed, right? I don't think there are, somebody correct me here, is there an Apple store open in the United States of America or Europe or Australia? Or I know that Apple opened their stores in China. They said, yeah, we're good. So they opened up their stores in China. But I think stores I know at least in the US, I think Canada and Europe, they're still closed. Yeah, right, Lenny, you're close to the old headquarters there. So I think like 80 or 90% of Apple stores are still closed, but apparently things are going well for them and their stock's still going up. Keep in mind, Apple had a nice little low here of about 212 low, and it's just been ripping since, right? Anybody curious how much Apple is up since that low? I think they're up. They've come off that low by just about 43%. 43%. That's massive. It's a massive move. We've seen By the way, I'm going to pace myself. Somebody pointed out a stock to me today that I was blown away. I had not even thought about looking at, and it's probably done the best out of any stock on the entire exchange that's over $1. And I'll show you what it is in just a moment. Besides the person that showed it to me, and I think you're in here, Sherry, besides you, because you know what it is, can anyone guess what possibly is the best performing stock? I mean, again, I don't know this for certain, but it's got to be about the best performing stock out there. We'll look at that in just a moment, but I want to see what your guesses are. Again, Sherry, you're the one that told me about it, so don't blow our cover here. But I want to see what your guys' guesses are. I can't imagine there's another stock that's done better than this one since the dip of everything. So, well, actually, I don't know. We'll see. We'll see how it's looking. Okay, Roy, bought 2 calls about a week before earnings, got hammered after earnings, so I bought another contract on the pullback and sold them after ran up. This week, took a gamble on earnings, but they expired on the 15th and 22nd, so I felt it'd be good to get back in. So, okay, good, Roy. That's excellent, man. Good work on that. Very nicely done. Very nicely done. So nice little run up on Apple. Tech stocks, in general, and Apple, I don't know if Apple is honestly considered a tech stock. I think they're more of a consumer goods, retail kind of stock, but they do trade on the NASDAQ, I believe, so maybe make some tech. But Apple is, I say that because one of my screeners doesn't list Apple under tech. It lists them under consumer, like FinViz. But if we look at the NASDAQ, you can see that it's done pretty well, right? The NASDAQ had this basically a total V bottom here. So tech has really killed it. Tech's been the big winner of this whole, coronavirus situation. The NASDAQ's up from it peaked up 60% from the lows of the sell-off, which put it just shy of the highs that it had back over here. So tech has been doing really, really good. We got the Qs that are, way up here doing fantastic. And just a lot of these tech stocks, of course, Zoom is up a bunch and Zoom's doing really good. And DocuSign, right? DocuSign, Lenny, you were mentioning DocuSign. You like that one a lot. DocuSign's up a pretty good little chunk. I still don't think it comes too close to the one that I'm talking about, but DocuSign's up, a massive amount, right? From that whole March dip, DocuSign's up about over 80%. So it's really just killing it. Yeah, Andrew. Yep, you're exactly right. Tech and cloud-based stuff is just really killing it. Lenny, you got your Meli. Whoops. This is Mercado Libre. These guys are having a heck of a run. So very, very nice little move on this one as well. Again, some really good percentages of movements higher. So, 80+% up from those lows. So yeah, Mercado Libre is just killing it. Again, software, tech, that stuff's just really doing great. Andrew, CLOU, you were talking about, right? That's having a heck of a run. Ooh, that might be a contender with the one I'm going to show you in just a second here. Although I think the one that I have in mind is still, 50%, not 50%. Yeah, that's a really good one. Good, nice, excellent. So yeah, have a look at that, guys. CLOU. So it's an ETF, cloud computing ETF. I like it. That's great. So very, very good stuff. Excellent. Roy, what do you let's see, what do we got here? Also bought 100 shares of NIO. Yep, that one's been on the radar quite a bit. Build up some shares and write some covered calls for income. Always a good thing. Happy to waiting for it to run up. Good. NIO. I know, whoops. All these types right in there. NIO. So NIO's, let's see, you're in at 315, you said, and they're trading nicely above that. So that's great. Yeah, it's nice to buy some of those cheap stocks and just sell some options on them. That's always a good thing. You can make some pretty decent money writing some covered calls and just making some pretty good bucks. There was a stock that I looked at today. Oh man, I look at so many charts all day long and I can't remember what they are, but stay with me for a second here. It was, oh, it was, I think it was Royal Caribbean. Oh my gosh, that keeps going over here. Speaking of covered calls, I was quite surprised at how much this was paying. Royal Caribbean. Um, this was interesting. If you look at, hold on one second, guys, 1 second. Let me just make one little adjustment here. Make sure I got the right screens up here. I'm just going to show you guys a couple of strikes and a couple of details here that we can that we can be watching for. Hold on. Here we go. We're coming back. Screen share. Okay, can you guys see my screen again? Are we back on the screen? Everything good? Okay, so Roy, you might be saying what I was kind of thinking here. Sold one contract, $3 naked. Oh, okay, December expiration. Yep, best option. Okay, good. I like it. So I found myself incredibly surprised to see how much money Royal Caribbean, I think this was the one. We'll have to go check the option chain real quick, but I'm pretty sure this was it. Royal Caribbean's obviously not doing much. This is the cruise line industry, and cruises are somehow hanging in there. I don't necessarily understand how. I don't know who is booking cruises, but people are, and I've actually heard people talk about it and say, yeah, I think we'll be fine. I'm going for it. You wouldn't catch me down on a cruise anytime soon, although I do love cruises. I think they're great, really lazy way to go vacation, and I just love that. But I was really shocked to find out Royal Caribbean's trading at about $38. If you bought RCL, if you bought Royal Caribbean right now at 38 bucks, and let's say you bought 100 shares of Royal Caribbean at $38, going to tie up 3,800 bucks, right? Everyone good with that math? But if you sell the $38 call option right now, so let's just say you bought it right at 38 bucks and you sell a $38 call option, it's paying 300, you make about $385 on that option. That's a solid 10%. I mean, that's pretty excellent. I just felt like that was a lot of money. That not that $385 is a ton of money, but it seems like I've just been looking at option after option after option. They're just paying, or stocks, and the options are just paying so little. I thought that was pretty great. So as long as Royal Caribbean can stop from from sinking, quite literally, pun totally intended, then that seems like an interesting stock to write some options on. You could tie up a couple of $1,000 with a few shares, and you can even go for a lesser expiration. What did we say for 15 days out? About 385 is kind of that mid price. You go 8 days out, and it's still in the high twos. So 285, 290. What are the chances that Royal Caribbean can hang in there for a week? Probably not terrible. So a couple hundred shares can be some pretty decent profit. If they can hang in there. So anyway, I was surprised to see Royal Caribbean doing that. So that is a shocker. That's a shocker. Okay, get started with me. Only cost $1.80. Yeah, excellent, Roy. That's good stuff. Yeah, selling some naked options. Roy's talking about selling some puts, getting the stock assigned to you, which is fine. NIO is one of those I think you're talking about here, or thereabouts. But yeah, some of these cheap stocks, selling the options and then just saying, yeah, if I get assigned the stock, great. If you make money on the option, cool. If you get assigned the stock, fine. Get the stock and sell an option on it. There's a lot of ways to kind of go about that whole thing. So all very good points, very good things to bring up. Thanks for the input there. Roy and everyone else. That's good stuff. That's good stuff. That's a great technique right now, is to find, so many of these stocks have gone down so much that it's like, yeah, we can sell some options, some naked options on these stocks, make a okay amount of money. And if it doesn't work out, get put the stock, and then you own the stock for a pretty decent price. So remember, guys, you can go over here to FinViz, and I think I've shared this link with you guys in the past. Couple of things that I always try to look at. Okay, there we go. Some things I always try to look at over here is just make sure it's somewhat mid-cap, that there's enough volume, it's optionable, US stocks. And then I'll just make a little adjustment here. Don't care about the moving averages right now. So I'll make that adjustment, and that'll tell me, okay, there's 676 stocks. Well, you can have these settings on here, and then you can say, and show me stocks that are under $5, right? What do we have under $5? Well, there's only 2 under $5, Cody and Ford. How about under $7? There's 11 of them, right? ADT, Security, Marathon Oil, of course. There's a couple in there, right? You can do under $10 and so on. So if you guys want to have a look at this, under $10, there's 48 stocks. And there's lots of good opportunities in there to just maybe sell some naked puts. If you make the money on the option, great. If not, you let the option expire and get exercised, and then you own 100 shares or 200 shares or 300 shares of whatever the stock is. If you want to have a look at this specific screener with these specific settings of under $10, guess what? There's a look at it right there. Andrew, is that a premium scanner? Yes. So there's the link for you there, Andrew. It is. You can get the premium version of this so that there's not so many pop-up ads. You can just sign in wherever it is. You can click on Elite over here, and then you don't get so many pop-up ads. You get a few extra things, but it's great. It's a great scanner. So there's the link. I just posted that right in the chat for everybody. Yeah, Roy, Ford's a good one. I think Ford's a good one to sell some $5 puts and get the stock at either a discounted price or just make money on the option itself. So it's not a bad technique either way. I like both those. Okay, so that's a little bit of what we're looking for, kind of keeping an eye on here. But we've got some good things to be looking at. So you can sell some options, you can trade some of this stuff. The way that you guys know, there's a lot of different techniques and opportunities here. But yeah, I like that. So let's talk a little bit about, hi Norval, welcome. Glad you got your internet working. Let's talk a little bit about some of the things we discussed last week, which was namely how I look at yen, how I look at the yen pairs. Now, I guess you could say the market made a little bit of a liar out of me. I looked at yen pairs as opportunities to trade in kind of unison with the S&P and with the U.S. stock markets. Typically, when the Japanese yen strengthens, it's because the stock market is either not doing well or getting ready to not do well. Now, it's no lie and it's no surprise that I've told you guys that I think that this is kind of a bearish setup here, right? This is, I don't think, this is technically a bearish setup, right? We get a big run down here on SPY, consolidates up, narrows, breaks out, and away we go. So as I look at that and I think to myself, okay, that's breaking out, but it's not wanting to head down. Well, something that's a little telling for me, and as I mentioned last week, I thought that the Japanese yen against a couple of different currencies was going to be a pretty interesting opportunity. If the stock market breaks out and starts heading down, then the Japanese yen typically will strengthen a bit. Now there's yen ETFs, as we talked about, and then there's just the Japanese yen versus other things. And hey, Mel, good to see you, my friend. And so what we saw happen, we talked specifically about kind of that Australian dollar, Japanese yen, or yes, the Australian dollar versus the Japanese yen. And you can see that that has kind of done a little bit of the same, right? It's made a little bit of a bigger movement because currencies do tend to move a little tiny bit more than kind of the stock market, like the S&P in general. But we did see quite a nice little early attempt at some confirmation over here on the Japanese yen against the Australian dollar. And I said these two charts look very, very similar to me, very super similar. Rising wedge over here on Australian dollar yen, and a nice little rising wedge over here. And so they kind of both have broken out and not done a whole lot, right? So very similar kind of movements. We're still kind of sputtering along, waiting for that movement to happen, and it kind of hasn't quite happened yet. But this is still a very good pattern. This is a very just typical kind of textbook move. It's breaking out. Remember, guys, the market is, trading this market is a little bit of a mental game typically. So whether you're trading, a currency itself or you're trading, the stock market, that stuff, these kinds of things love to happen that, you get a break, you get a move, everybody jumps on it, it doesn't go anywhere, everybody jumps out of it, and then it goes somewhere. And so that's kind of what I'm looking to have happen with these yen pairs as well as SPY. I'm still looking for this to kind of just say, you know what, there's a little dip, but we've still got some potential to move lower. Now, I'm not looking for a big, violent, aggressive move lower in the U.S. markets here, but I think that a little correction could be in the works, and it could be kind of interesting. So I'm going to be watching for that to happen. Remember, I talked about these three right here, the Australian dollar versus the Japanese yen, the pound versus the yen, and the dollar versus the yen. And so we saw some of this stuff make these kinds of movements here. We saw the dollar yen has kind of continued down, but I think probably the bigger mover certainly was the pound versus the yen. That made a bigger move down over the last several days. It wasn't quite as similar looking of a pattern, but still, big run down, consolidation, breaks consolidation, heads lower, right? And so we've seen that, play out on the currency side of things. Remember, for the where's my list? Oh, there it is. For the, good grief, there we go. For some of those ETFs I talked about, we can definitely take advantage of some of those movements. I think what is the, yeah, there's the yen, FXY. And so, Japanese yen ETFs kind of slowly trickled its way higher this week. And everything's kind of been a little bit interesting. So we've seen that happen. One moment, guys. Okay, so anyway, that's a little bit of what I've been watching. I'm just keeping an eye on this, and I think it's pretty safe to say that that overall we've got a pretty decent possibility to still see some of this happening. I'm not a big stock market bear, but I'm just kind of wondering if we're going to see this kind of movement. Right? I think that there's not a terrible possibility that we could just see a lot of sideways activity in the stock market over the next couple of months. That wouldn't surprise me at all. I've talked to a couple of you about this. Um, Roy, we'll definitely have a look at that at USO, um, and all that. We'll talk about that in just a moment for sure, because that's a good one to bring up. So one thing to look at here is there's an interesting article. You guys can have a little read at this and have a look at it. Tell me what you think about it. I think it's an interesting point that they're bringing up over here. Our good friends at Seeking Alpha. On the stock side of things, it's a pretty interesting comparison where they talk about the S&P, just U.S. stocks in general versus things like the Japanese stock market, right? The Nikkei, NI 225, I think is what it is. And this was kind of an interesting comparison they made. They said Japanese economy was rocking and rolling, doing really fantastic. They went to zero interest rates and tons of stimulus. And look what happens. Look what happened here. The stock market in Japan topped out at the end of 1989, beginning of 1990. It topped out. And look what it has done. 1990, how many years ago is that? That's nearly 30, that's about 30 years ago, coming up on 30 years ago, that their stock market hit its high, and it has never come back to that high. Now, yes, it's had, it's had some big lows, and we've held some double bottoms down there and taken out some important resistance levels, but for the most part, it's still holding on to those lows. Now, if Japan ever can kind of turn this around and do whatever the things are it needs to do, we could have one heck of a majorly bullish pattern here, which is, a big run up, a rounded bottom, ran out of mouse, a big rounded bottom, and then a big double top and get back up into that. But in nearly 30 years, they haven't been able to retest those highs. In this article that I just posted in there, if you guys have a little look at, again, I'm not just, I'm not subscribing to it. I'm just saying it's an interesting point that's brought up here. Is the U.S. market going to, flutter for a decent amount of time, maybe for a long time? I don't know. We'll see. I don't have the answer to that. Nobody actually knows, to be honest, because it's the future. But could something like this potentially happen? Well, I think it's possible. But an interesting comparison, right? Japan, zero interest rates for long periods of time, tons of stimulus, and their stock market never really recovers, right? Never really recovers. And we've kind of just done that, right? The things we talk about is in 2008, when the U.S. had, our big financial meltdown, interest rates were like at 5% or something. And so it was easy to lower interest rates and continue to lower interest rates. We had something to work with. But now, when this happened, we were at like 1%. Oh, no, I think it was 2%, right? And interest rates just basically went down to 0.25% just immediately. And now we're hoping this recovery really takes hold, which it's doing a pretty good job at. Remember that in 2008, when a stimulus package had to be put together in the U.S., remember that we had this whole thing happen right here, right? The stock market sold off, and it bottomed out in about March of 2009, and that's about the time that the government had their stimulus package put together, right? Keep in mind that it sold off aggressively in 2008. They didn't get anything figured out till March or April, right around there. 6 or 7 months later, this time we had this real aggressive sell-off, and a package was announced within like 1 week, right? 6 months, 1 week. And that's definitely part of the reason of such an aggressive recovery that we've seen so far. So anyways, just a couple of thoughts, couple of things to look at there. Should be interesting to see kind of how it plays out and how it goes. Andrew, do we think gold and Bitcoin going up as hedges against inflation and negative interest rates? Yeah, I mean, I think, I always like the aspect of the prospect of gold. We've talked about gold a bit, and I think that it's just maybe the best looking chart that I've seen in a long time. And this is, I'll bring this one up again, but that's a great looking chart. Gold is going to have to go up. this is a good time to own gold and trade it probably through the $2,000 mark. So, I mean, could I see gold at 2,500, 3,000 bucks? Yeah, I could. I could. I'm certainly not the doomsdayer out there that says gold's headed to $10,000 and everything else is going to, hell in a handbasket kind of a thing. It's more, this is just a great technical chart, and gold is always a good hedge against inflation and against uncertainty, although gold itself is a wild animal. So yeah, this could be a really great time to buy some gold and make some money on it. So yeah, I love that. Bitcoin's a strange one. Bitcoin typically, if there's a little stock market sell-off, sometimes people will buy into Bitcoin. This whole run right here has been very different. Everybody's been just selling and exiting the market and just moving completely to cash. As Ray Dalio says, cash is trash, but everybody's moving to cash right now. And we're seeing bonds coming down. We're seeing the stock market fluttering and starting to run out of gas a little bit because everyone's just out of everything. Everyone's terrified about this crazy market. And, I don't think they're unjustified in that, but it's changing the dynamic just a little bit for sure. So gold, yeah, good. Bitcoin, I don't know. Bitcoin is a little bit of it's real temperamental. It's making its way back up again, and it's breaking out. Bitcoin does pretty good being pretty technical. As I've said before, the only time I think it's a good idea to buy Bitcoin is sub $5,000. Anywhere in that $3,000 to $4,000 range, no questions asked, but at least below $5,000 is the only time I'll buy Bitcoin. Anything above that, just nothing. I'm just waiting for it, and I'll buy those dips whenever they happen, kind of a thing. So yes, Clorox is trying to solve the production shortages. Well, what is Clorox? There we go, CLX. Clorox seems to be hanging in there, doing pretty well. They're doing a bang up job, keeping those highs. I have been very skeptical since the beginning, maybe foolishly, I don't know, but buying into anything that's getting hoarded, so to speak. So Clorox and Costco and Walmart and Kroger and all these stocks, the grocery store stocks, I've been skeptical of those because I thought, you know what, at some point in the very near future, the panic buying is going to end, right? Clorox had a little bit of a pullback, and they've recovered pretty nicely, and they're staying up there. And I think Clorox is probably a good opportunity, but I'm just kind of steering a little bit clear of that one, not for any other reason than I kind of put it in the same category as Costco and Walmart and Kroger. Whoops. And all these stocks where these guys were killing it, right? They couldn't keep food on the shelves, they couldn't keep toilet paper, and they couldn't keep chloride. They were selling out of everything constantly and making more money probably than they made in a very long time in such a short period of time. But I figured the panic buying was going to come to an end, and the stocks were going to slump, and they certainly have. So yeah, I think there's some decent opportunities there, maybe for the long-term run. But I would definitely like to see a big rundown. I think some tech stocks are going to be pretty interesting and pretty great for buying into, but I really do want to see some big pullbacks. I think this could be, this week, next week, we could see a little bit of starting to push lower, a little bit of correction in maybe some of these tech stocks. We've seen the DocuSigns, make these massive runs. I want to see these guys pull back just a little bit. I want to get a nice little opportunity, to buy in on these. And, DocuSign's way up here, Zoom way up here. I think there's going to be some good opportunities to kind of short a few of these stocks and just kind of make a little bit of a rundown on these guys. Anyone watching Google? I mean, how's this one looking? Google looks very much like the S&P, kind of a hybrid between looking like the S&P and looking like some of the other tech stocks, right? Of you know, are we going to have just a big V bottom here, or is Google going to do a little bit more of that, and maybe we make a double bottom, maybe we make just a higher low and run up there. I don't know, but I think that some of these guys are going to have to make some, you know, some corrections here. And I'm just watching. You know, I can't stress to everybody enough that you just can't trade what you think. You got to trade what you see. And that is the market that we're in. Because right now, so many of these big movements don't make a lot of sense, right? We're going, well, why is that happening? Doesn't matter why. And actually, I hate to break it to everybody, but you'll never know why, right? We never will know why a big sell-off happens. We've talked about this before, right? Everyone says, oh, it was the coronavirus that caused the big stock market sell-off. Yeah, that was part of it, but there's a lot of underlying things that don't get talked about. So the why doesn't ever matter. What matters is what we can see on the charts and what we can make sense of. If I look at something like Google, I say, okay, Google's going to make a bunch of money and everything's going to be fine. But maybe not. Maybe AdWords are going to take a big dive. And remember, Google AdWords is I mean, their ads are, I don't know, someone help me out here, 99% of their profits, give or take. So, Mel, it's all Google AdWords. That's everything. That's their ads are everything. Google gives out a lot of free stuff. Honestly, I'm happy to give Google all my information. They can follow all my habits and track me down and everything because their stuff is so great. I'm a typical, I should be part of a sci-fi movie. Let's follow the zombies. They seem nice, you know. I'm kind of in that. I'm kind of in that camp a little bit of, you know. But Google is just, all their money comes from AdWords, because everything else they do loses money or they just give it away for free. So, you know, so I look at that and I think, okay, we're already seeing early signs of, you know, ad spending is down a huge amount. Ad spending is down a massive amount. And so that's going to impact Google for sure. And that, you know, probably is going to give it a nice little opportunity to give us a little correction, break out of this channel and start getting a little bit bearish. I'll be watching for that. I'll be ready for that. Do we think Apple is going to do any of the same thing? I mean, it's possible. You don't just have this kind of a move higher. I mean, Apple's got a cult following. Obviously, I'm using a Mac right here, and I have an iPhone, and I don't like iPhones at all, but I do like Macs. I got peer pressured into my iPhone, and I still haven't adjusted to it. But I mean, you look at some of this stuff now. Whether we get over here, Mel, they make good anchors. I like it. I like it. You know, whether we get a double top over here and this, you know, comes off that, I don't know. But I'm certainly watching for that kind of movement, right? Apple is just going up forever. Fine, trade them higher, but watch the channels, watch the patterns, watch the things that we talked about over here on the webinar last week, and make sure that you're paying attention to that kind of stuff, and that we're not, you know, we're not injecting our opinion too much into it. We're just trading what we can find on the charts. That's going to be so crucial. Okay, I think I missed a couple of comments here. Okay, Andrew, if no positive return in bond yields and money has to go somewhere, charts say information technology must be placed in stocks. Trade what you see, not what we believe. Exactly, Andrew, exactly. Bonds are a big one, right? Good heavens, I keep typing that. Bonds are a big one, right? We've seen TLT just ripping higher and starting to, you know, broke out of this big channel, but it's starting to really sputter, right? People are saying, how much money am I making holding my bonds? And they look at bond yields, and you look at 2-year yields, and you say, okay, 0.14%, great. How about 10-year yields? Oh, a little over 0.5%. How about 30-year yields? Oh, way better, 1.3%. So bond yields are terrible, just absolutely terrible. So at some point, everybody's going to realize that you might as well just dump bonds as well. If you're not going to own anything, don't own anything. Don't own bonds, because that's, I mean, it does nothing for you. It's about a savings account pretty much. which is great. Lots of safety. We like that, but pays nothing. So the markets are changing. People are, money is having to transition. Things are having to move around a little bit, and there's going to be some outliers in there that we're going to have to watch for, right? And those outliers are going to be a lot of random stocks. A few interesting ones were brought up earlier on, like Lenny, you were talking about Mercado Libre that's up a bunch, DocuSign's up a bunch. These are all some really good stocks that maybe we didn't think about, but they're kind of on the radar now. I've been, obviously, as you guys know, talking about airlines and just saying, look, there's going to be an opportunity at some point here. Warren Buffett threw a lot of cold water on that idea this week as he sold all of his airline stocks for a loss of about $4 billion, more money than I make in a year. So more money than I'll make in 17,000 years, maybe. I don't know. But $4 billion loss on his stocks. He dumped everything saying airlines are going to be terrible. Nobody knows how it's going to go. Get out of it. Well, we have a nice little pattern here on Delta. And what kind of pattern is this? This is more of a descending triangle, right? We had a little rundown. That's a rising trend line. That's a descending trend line. It's a descending triangle. And that tells us, well, don't be too surprised if this heads higher, but also don't be too surprised if this heads lower. So, do I think airline stocks are good for the long haul? Heck yes. But that's going to be a long-term play. If we get one more break lower, one more dip down on airline stocks, that's going to be a fantastic opportunity to just buy as much as you can and don't plan on doing anything with it for a couple of years. Airline stocks will do great way down the road. It's going to be a slow grind, so I'm not in any kind of hurry to get into these guys. They've just been sitting, consolidating, not doing much. So airline stocks are slow and steady. But our pattern tells us that it's that's the case, right? Descending triangle can go either way. We just got to be patient and wait for that either way to happen. Banking stocks, just go to my go-to Bank of America. Little on the bearish side here. Bank of America looks like it might be heading just a hair lower as it's already kind of broken out of this rising wedge that we've had in place here. And so, yeah, I think Bank of America might be making a little bit of a dip, right? We start to get these lows taken out, and that heads into a double bottom very easily. So I just can't imagine these banking stocks are going to do very good over the next little bit. I still like the long-term perspective, but when you have these kinds of patterns, you say, well, probably they're going to break down. And when you see these kinds of patterns in sectors as well, so like XLF, I think, is the financial sector for a financial sector ETF. We see that this one has had, really it kind of had that movement right there. So it already did break out. This is it's kind of hard to really even chart that, but that did make a break, but it's doing a pretty good job holding support right around here. So we need to get it below. XLF looks pretty good below about $21. I think there's some pretty good moves down there. So, everything is just kind of starting to look a little bit bearish. We're starting to get opportunities to get some bearish trades in here. So I like that. Lenny, TDOC. There you go. Oh, Teladoc. Okay. Yeah, doing great, right? And that's what a great area, what a great place to be looking for some opportunities in the in the contactless healthcare situation, right? That's there's a lot of these in California. We use an app called Heal, where a doctor just comes to your house, and you don't have to go to the hospital, do any of that stuff. And I know all these teledocs and these video conferencing services for doctor visits are great. So yeah, there's a lot of that to be looked at. I'm going to be pretty I'm going to be pretty interested to see how some of the payment processors do, right? MasterCard and Visa. We're coming into an interesting area, and this just reinforces what I've been talking about, right? I have thoughts, I have theories, but I'm just going to trade what the chart says. I would love nothing more than to get MasterCard dipping down a bunch. They're $278 a share. I'd love to see these guys dip down to the $200 mark or thereabouts and take off from there. But you know, that looks pretty bearish to me. That's a bearish looking chart. So yes, I'm gonna keep that in mind. But I think in the long term, it might get interesting to trade. It might get interesting to trade the potential of these companies like Visa and MasterCard. A lot of things are going to go to cards only, right? People don't want to touch cash anymore. You know, here where I am, I can't pay with cash anywhere. And it's very ironic, by the way, because people always tell me, oh, you got to carry some cash around. I have a friend that always has $500 in his wallet. And I don't ever have a dollar. I just don't ever have a dollar because I hate carrying money. I just have cards. I just pay with my cards and everything's fine and good. And so when this whole thing happened, I went and got a couple $100. I thought I better have a few $100 in my pocket just in case. And I still have those few $100 in my wallet. And I've never been able to spend them because now nobody will take cash. Finally, the one time that I say, okay, I'll get some cash. Now people don't actually take cash. I haven't carried cash for 40 years, and now everybody won't take cash, and I have cash. So really weird. There you go. Good. Oh yes, use it for tips. Use it for tips. For sure, but I mean, I think as payments go from cash to contactless credit cards and so on, I think Visa and MasterCard are going to have to benefit from that, right? I mean, it's all payments will go basically essentially through Visa or MasterCard. So I look at that and I think there's some bearish potential there, but there is going to be, there's got to be some good opportunities coming up on that one. Same kind of chart here. Whoops. So Visa's got the same thing. Very nice rising wedge on this one. And I'll trade that, right? I'll trade that wedge, and I'll trade this thing down, but I'll also be very ready for that kind of movement. So I think Visa and MasterCard are going to be pretty high on my list. Yes. Hey, Dom, nice to see you. Yes, PayPal. Yeah, you guys are both bringing up the same one at the same time there. PayPal is always on a run, which I don't understand. I have PayPal, and I use PayPal from time to time, and it's just I don't know why they do so well, but they do, and they're killing it, right? They're totally killing it. So PayPal's on a big move, making a big run. Are you guys ready to see what possibly the best performing stock in the history of the stock market is? Does anybody know what it is? And of course, there could be better ones out there, but percentage-wise, I'm still shocked to see this. Yes, yeah, that's good, Mel. Yep. Yeah, micro Bitcoin implant in the future. I think I'm going to skip on the implant. That sounds painful, but yeah, you're right. I think there could be something like that. I know that, I mean, at this point, probably retinal scans or, fingerprints should be the new payment processor of, payment method of the future. Nose rings. Oh, man, I keep typing into this thing. Do you guys know what Wayfair is? Anybody know what Wayfair is? They sell online cheap furniture. Have you seen what the stock has done? Do you know that these guys bottomed out, just like everyone else, kind of mid-March at $23, and they're trading at $176 right now? Wayfair, of all, anybody want to put that into percentages? that low to this current high, Wayfair's up around 750%. So I don't really know why. I've bought things from Wayfair. They're fine. You know, I I don't get why they're just killing it so much, but no delivery fees. That must be it. They must be doing something because their stock is up a massive amount. Would I expect Wayfair to be up this much ever for any reason? No, I would not expect that. Not at all. But they're up like crazy. Andrew, yes, I believe you can short them. But Andrew, what is the thing we've been saying? You could definitely short Wayfair, but we got to trade what we see, right? And when a stock's going parabolic like that, there's a lot of momentum behind it, and at some point it will come crashing down and correct and fill in gaps and so on. But we've got to wait till there's a real good reason to do that. There's a nice gap right there, but this thing is running like the wind, so we don't want to get in front of that one too much yet. But Wayfair is definitely killing it. Yeah, it's not a bad gig. Not a bad gig at all. So Wayfair's been doing good. We've seen, I know a few people are wondering about and looking at USO. We saw stocks go, or oil prices go crazy. USO had a split. They did an 8-to-1 split. So there's, you know, USO was trading at $1, and now, you know, after the split, it was trading at $18 or $16 or something like that. Trading at $1.80, you know, whatever it was. So USO is making its way back. Oil has done quite well. We've seen a big recovery here. You know, just the next month's prices are sitting in the low 20s, right? If you go to the following month, in the 25s, right? So oil has made quite the comeback. If we look at December, $30, right? So oil's hanging in there. It's doing pretty well. It's made quite a strong comeback, and so I think that there's some good opportunity there. I'm always watching stocks like RIG, which, you know, I think these guys might suffer and be kind of slow and boring for a little while, but I think they'll make their way back. USO, you know, again, kind of slow and boring, but trying to make its way back. Andrew, Halliburton, you know, again, I look at that and that looks a little more bearish to me than not. Some of these other ones are just kind of flatlining, but then you've got HAL over here. It's kind of giving us that rising, that little rising channel. So we could see some of that, right? So just kind of keep that in mind. USO doesn't quite have that, right? USO is just kind of flattening out here. You know, RIG kind of just flattening out there. Hopefully regaining a little bit so it can start running up. But just watch those patterns, right? Just be aware, be cautious of those patterns, and kind of see how they go. Mel, I don't think Wayfair has stores. I think it's all online stuff. So I would say that the thing that I'm looking at doing this coming week, I'm just very closely watching those patterns. I think that tech stocks could have a little bit of correction coming, right? We could see some of that. We could see some of this. Twitter, right? I'm kind of just watching these guys to see where are they headed, because we've got a lot of these kinds of patterns, right? They're just showing up everywhere. And when that kind of stuff happens and you get this, it usually leads to that, right? The charts are telling us something. We've got to pay attention to that. And I think the tech stocks are going to be interesting for that. Is Apple going to give us that same kind of movement? It looks possible. Is SPY going to play out on this rising wedge breakout? It looks like it still can. It looks like these things can all work to our benefit in that direction. And so I'm just kind of watching that. I'm waiting. I'm looking. I'm just being careful and looking for that opportunity to start trading some of these things down. So that's a little bit of where my brain's at right now. A little bit where my head is. What do you guys think? Did I forget any? I mean, obviously, I didn't look at a lot of things, but any things in particular you guys want to look at that I didn't bring up? Yes. Yeah. This right here, Andrew, is just kind of a rising wedge, but yeah, bear flag, rising wedge. Uh, you know, Halliburton's a little bit more of kind of a bear flag right there, where you just get that channeled consolidation. So yeah, those are all bearish flags. They're all that kind of stuff. So yep. Yes, sir. Yes, sir. What else, guys? Questions, thoughts, comments? So what I want to say, as opposed to giving you guys tons of ideas today, I want to just say, let's watch for the opportunity to get to get confirmation, to just trade confirmation. Why not trade confirmation? Why not trade the patterns we see on the charts? Let's just do that. It's easy, it's straightforward, it's a good thing to do. And we've just got them all over the place. So I think the tech stocks are going to be interesting. I think some of these financial, airline, travel stocks are going to be interesting to just follow those patterns and trade them wherever they lead us. Airline stocks may give us an opportunity to, put some bearish option trades on there. Financial stocks might give us that opportunity. It could just be popping up a little bit of everywhere. Andrew, so yeah, confirmation. If we're looking at any one of these things, I just want to see kind of what we saw on SPY here. I want to see I want to see some movement outside of the pattern, right? That's pretty much all confirmation really is. We just get daily candles opening outside of this pattern. XLF, I think. This one was interesting because we got a breakout here. We could say, well, there's our pattern right there, right, and somewhere in there, right. We got a breakout, but then it just kind of came back to that consolidated kind of support zone. So sometimes if there's that kind of a level nearby, we can watch and say, I want to make sure I can get through that level, right, or I'm going to give myself extra time to get through that level, right. If I'm going to get in at the breakout because we're having some candles opening below our pattern here. I'm going to give it extra time because there is some support zone down there. So yeah, just usually it's going to be daily candles, getting daily candles to open above or below. So yep, that's what we're looking for. Does that help? Does that answer your question? Just daily candles. Pretty much. Any other thoughts? Any other questions, comments, guys? If not, we have some great things to watch this week. I'll get this recording posted, and then we're going to have a look at that. And we'll take it all from there. But thanks for being on, everybody. Hopefully it was helpful. Hopefully you guys have a little better look and feel at what the stock market's doing, and we can all find a couple of good trades to take this week. So don't hesitate. I'll be in the chat area. Just type over questions, comments, stocks you want to look at, and we'll see if we can put some good trade ideas together. So thanks everybody. Thanks Lenny, Mel. Thank you guys. Andrew, Norval. Thanks for participating and being in here. Thank you, Dale. Good to see you. Thanks, Mary, Steve. Good to see you guys. Have a wonderful evening, and we'll watch the market and see what it produces for us. So thanks everybody. Thanks Martha. Nice to see you. Take care, guys. Have a good evening and a good rest of your week.